You might think that price action is all that matters, but I hate to break it to you. Open interest is one of the hidden forces driving market moves. And if you're ignoring it, you're handing your money to the pros on a silver platter. Stick around because in the next few minutes, I'll break down exactly what open interest is, how it's measured, and most importantly, how you can use it to start trading like a pro. So what is open interest? In simple terms, it's the total number of active futures contracts in the market. Think of it like a fuel gauge for leverage. The more open interest, the more fuel in the tank. But here's the catch. More fuel doesn't always mean a moonshot. It can also mean a massive explosion and destruction. Why should you care? Because open interest exposes what price action alone can't. If the price is going up, but open interest is dropping, that means traders are closing their positions, probably taking profits or covering shorts. That's weak. But if price is falling and open interest is rising, that means new short positions are piling in. Watch out for a potential short squeeze. Now, if open interest is climbing fast along with price, that's real momentum. New traders are entering, putting their money where their mouth is. This is what separates pros from retail traders, and yet most people don't even check it. So here's how open interest actually works. It increases when new money enters, new long and short positions opening up. It decreases when positions close, either traders taking profits or getting liquidated. And this is where the magic happens. Rising open interest with rising price, that is bullish conviction. Rising open interest with a falling price, that's bearish dominance. But if open interest is dropping, that's your exit signal. Momentum is dying. See what I mean? This isn't just some random number. Open interest tells you where the real money is going. Still skeptical? Let's look at the receipts. In 2021 Bitcoin crash, it didn't come out of nowhere. Open interest was building up for weeks, hitting extreme levels before the inevitable liquidation cascade wiped out billions. Yes, billions in mere minutes. Traders thought they were in control, but in reality, they were sitting ducks, over leveraged, and completely blind to the setup. Then we had the FTX collapse. Open interest was at ridiculous levels before the final nuke. Everyone thought they were smart money, but they weren't. They were just leverage addicted gamblers playing with fire. And the result was a chain reaction of liquidations that erased fortunes overnight. Let's not forget about the countless short squeezes throughout history. You think those happen by accident? Not a chance. It's a setup every single time. Open interest spikes, retail traders short the heck out of it, and then market makers send them straight to the slaughterhouse. They engineer the squeeze, they force mass liquidations and pocket the profits while retail traders stare at their screens in disbelief. Now, before you run off thinking open interest is some kind of magic crystal ball, no one has any of those, let me tell you how traders often mess this one up. First, they assume rising open interest always means bullish momentum, and it doesn't. They ignore liquidations. You see, open interest spikes can be setups for massive wipeouts. They don't check funding rates. High open interest with extreme funding, that's a leverage bomb waiting to explode. They don't understand who's entering the market. Is it smart money or is it over-leveraged degens? And worst of all, they think every open interest increase is bullish. Sometimes it's just dumb money piling in before they get clapped. Don't be that guy. Context is everything. All right, let's get tactical. Here's how you actually use open interest to make better trades. Track open interest with price action. Real breakouts come with rising open interest. Fake outs don't. Watch open interest with funding rates. High open interest with extreme funding, that's a liquidation event coming. Check open interest with CVD, which is cumulative volume delta. Who's in control, longs or shorts? Compare open interest across exchanges. If Binance and Bybit show different open interest trends, something is up. This is how pro traders front run the market instead of getting steamrolled by it. So where do you check open interest? You can track it on TradingView. And the best time frames, if you're looking at macro trends, use the daily or 4-hour chart. If you're scalping or day trading, the 1-hour and 15-minute charts are your best bet. And don't just check it once a day. Set alerts for sudden open interest spikes or drops. These are often precursors to massive moves. Now, before you go thinking open interest is some kind of cheat code, let me give you one final warning. Open interest is powerful, but if you use it wrong, it'll send you straight into the ground. Use open interest wisely and you'll see the market like never before. So, here's the question. Are you gonna start tracking open interest like a pro, or are you just gonna keep guessing? Drop a comment down below. Have you ever ignored open interest and paid the price? Or have you caught a killer trade because of it?